Hello everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now I hope everyone had a great weekend. It should be relatively easy for everyone to ease their way back into the markets at the start of the week. We've got a very quiet session. The week as a whole is actually looking relatively quiet, although we have had quite an interesting start to the week. As you can see, the lack of economic data is having an impact. News flow as well is looking pretty light, although we have had some interesting commentary throughout the start of the Asian session and over the weekend as well, which has really fed into how the market's moving today, and really fed into the volatility which we've had as well. Now, of course, that is being helped along by the illiquidity in the markets as a result of the fact that we are still in this summer months. August is typically extremely light on terms of trading volume, so the moves you can get can be exacerbated by that. We did get comments over the weekend from Fed Vice Chair Stanley Fischer, who didn't necessarily give any indication of when the next rate hike is coming, but he did suggest that the Federal Reserve is close to achieving its full employment and 2% inflation target, which would suggest that a rate hike is surely around the corner. Maybe he didn't want to go into too much detail because we do have the Jackson Hole event at the end of the week. Janet Yellen, the Fed chair, is due to speak on Friday, and typically in the past, this event has been used for Fed chairs to give some indication about future monetary policy, especially if something significant is going to happen ahead, and particularly, again, if the markets aren't correctly pricing in such an event. Now, Janet Yellen didn't speak at last year's event, but this is an event that has been very closely watched previously, particularly with Ben Bernanke when we were talking about asset purchases, or when we were talking about the tapering of those asset purchases, and some insight on future interest rate hikes. Now, Janet Yellen may well use this event to warn about an interest rate hike this year, which is something that the markets are not currently pricing in. The market's currently pricing in March. Should Yellen suggest that we're going to see an interest rate hike this year, it's going to be very important that she says it in such a manner that the markets can't be confused by. The problem which we've had recently, and we've seen more examples of it over the course of the last week, is that we've had comments from different Fed officials, and they're quite contradictory. One Fed official may suggest, for example, like we heard from William Dudley last week, that we are nearing the next rate hike and we could even get two before the end of the year. Then you could hear from John Williams, who suggests that the inflation target should be higher, which suggests that maybe there is a reluctance within the Fed to raise interest rates. Robert Kaplan said something in the middle. We need some form of consensus from the Fed if we're going to believe that we're going to see another rate hike, and it's now the job of Janet Yellen on Friday to convince us that consensus exists, either for a rate hike or gives us a reassessment of the US economy, and gives us some direction about when the next rate rises could materialise. Now, the fact that one of her closest allies in William Dudley and her Vice Chair Fisher are both suggesting that the economy is nearing full employment and that inflation is near target suggests to me that she's going to be on the more hawkish side of things, and that's what we're really seeing fed into the markets today, with the dollar up currently 2/5 of 1%. It was up higher a little earlier on, and it was that really disrupted the markets earlier on. We've seen the dollar trade much higher against the yen throughout the day. The pound, only the pound performing better against the yen in terms of the major currencies. Now, the dollar-yen pair moves were driven partially by the Fed comments, but also partially by comments from Bank of Japan Governor Haruhiko Kuroda overnight, who suggested that there is sufficient chance of further monetary stimulus coming at the September meeting. Now, the Bank of Japan did provide monetary stimulus at the last meeting, so this was potentially a little earlier than people were expecting, but that was seen by many in the market as just not doing enough. Increasing things like the ETF purchases just isn't a strong enough bout of monetary stimulus in order to try and counter the deflationary trend which is clearly remains in Japan. So the dovishness in the Bank of Japan comments compared with along with the hawkishness in the Federal Reserve comments from Stanley Fischer are helping lead the dollar yen higher today, although it has paired some of its gains from earlier in the session. Now, these dollar moves is really what has driven a lot of the market moves so far today, especially in the commodity markets. We've seen gold, silver, Brent crude, WTI crude, copper, and the likes all deep in negative territory today. We saw silver selling off very heavily earlier on in the session, and I think this was a combination of a few things. One is the dollar comments over over the weekend. You then, as Jeff actually goes into detail about in his article this morning, you get this kind of witching effect where the movements in the dollar trigger these movements in commodities. The low liquid environment then triggers much larger moves than you would otherwise see, and this triggers stop losses, which exacerbates the move further. Again, this is something which Jeff, our analyst over in Singapore, goes into in more detail in his piece this morning, Rising Yields Melt Silver in Asia. I highly recommend reading. That's a very interesting piece if you want to understand fully the moves that we saw earlier on in the session. In the equity markets, we are seeing equities moving into and out of negative territory. I don't think there's any driving force behind the moves that we're seeing in Europe so far. Today already I've seen it in red, then back in the green, and now back in the red currently. When the US opens in a couple of hours, I imagine we're going to see more of the same. The bond market space, we've just seen the 10-year Treasury yield nip lower for the first time today. That was higher earlier on in the session. Again, higher yields, lower prices on the back of those Fisher comments, but it does seem to have reversed in the last few minutes. Aside from that, like I say, it has been an eventful start to the session, but there isn't many planned events to come, so anything we do get in this illiquid market is likely to have quite an impact on the market. For more in-depth news and analysis, check out OANDA Market Pulse at MarketPulse.com. As I said earlier, there's plenty of great articles to find there today. Mentioned Jeff's article, Dean's piece, Market Fish for Fed Clues. 4 key market events to come today is also very interesting. We've also got some great pieces from Kenny. Also, my latest piece on ahead of the Jackson Hole Symposium also on there. Alfonso's week ahead again is also fantastic. So I really recommend people take a look at the website. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA FX Labs, which has a lot of great tools designed to help you with your trading.